We're all going on a summer holiday, courtesy of your business. I hope the taxman's not listening. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. Right, Claire, this week we've had a disagreement about suitcases.
Oh,
I don't know
really
why.
annoyed me. Really annoyed me.
Yeah, it shouldn't.
We're going to Norway in a couple of weeks, aren't we? And we are doing, not like backpacking, we are arriving in Oslo for a few days. We're getting a train over to Bergen and then we are getting on a Havila cruise and stopping at all the different ports in Norway. And we've only got like what we call like carry-on cases, so wheelie cases that you can take in the cabin with you, and then like really big checked bags. And you decided that you wanted one in the middle just for this trip.
Yeah, because the small ones are too small and the big one's too big. It's a real simple. I'm
just
simple
like
with
the
my
list
numbers,
of
isn't it?
stuff that you told me that you
The
needed
problem
was
is
just
it's
ridiculous.
not really warm enough that you don't have to pack a big coat and fleeces and all that, and they take up a load of space. So, you know, we need something that's just the right size. This is really boring, isn't it? Shall we find out what this week's news story of the week is?
Absolutely. To be fair, I don't think the news story of the week is much more interesting because we did just have a little bicker about that as well. But
I just
go
thought
on,
it was
wow.
fascinating. It's not really a
Pull
news.
this back, pull it back from the brink, Simon.
It's my news story.
Go for it.
So, well, the starting point was this is where I ordered my library book, which I wasn't prepared. So I really wanted this book called The Triumph of the Optimists, but it's over £100. So I ordered it from the library and they got it for me. It's come all the way from Aberdeen University.
Amazing.
Through Intercompany.
It looks like an Argos catalogue.
It literally looks like an Argos catalogue, probably bigger. It's absolutely enormous, but it's amazing because it's basically like 101, the past 101 years worth of research on global stock markets. It is the most unthrilling thing ever. Don't laugh at me. Anyway, I'm only on page 3 and this is fascinating, right? So, I mean, I don't know
you
where...
are only on page 3, but each page is like a page of A3 paper, isn't it? So
Anyway, I thought I love how things change and often quicker than you can possibly imagine. So unfortunately, the book was published in the year 2000, so it's a bit out of date now. And it just goes to show how out of date something can become in such a quick space of time. 25 years. You feel like the year 2000 was like nothing ago, don't you?
Yesterday.
Like literally yesterday. So it's got the top 10 countries ranked by their market capitalization. So this is if you took the total value of the global stock markets and broke it down by country, what would the top 10 be? And in the year 2000, obviously number 1 was the United States, and they owned 33% of the global stock market. And
staggering.
No, sorry, 46% of the global stock market. So I've just realized the stats I've got in front of me are the ones I'm about to tell you, which are from this year. So, United States represented 46% of the world, and the second largest was Japan. And this was only year 2000. They were the second largest country in the world, massive at 12.6%. Then, God save our gracious Queen, the United Kingdom at 8.1%.
Can you say Queen?
King.
Late
yeah, but
Queen,
this is the year 2000.
King. Oh, okay.
So,
okay, I'll give you that.
So the top 3, 46%, 12%, 8%, and then you're down to number 4 at 4%. So a big drop off. So we were like top 3.
2/3 of the world were controlled by
United States, Japan and the United Kingdom.
And when you look at the top 20 in, I'm going to say in the US or in the world, the top 20 in the world, I think 10 of them were Japanese, weren't they?
You're talking about something totally different there. You're
in
talking
terms of
about
the largest
country. Companies in the world that were covered were Japanese,
but now there's none.
And now there's none.
There's none in the top.
And then, like, from number 4 down, you're into the Europeans, the France, Germany, Canada, Italy. Obviously, Canada's not. But you're like 4%, and you're very quickly at 2%, like, by number 6. So, really, really, the UK was up there in the top 3. So now, if you wind forward to 2025, I was just curious, like, what that looked like today. And today, it's still the United States, but they've been diluted from 46% to 33%.
Okay.
Second is now China at 9.4%. So, China have gone from 0.9% to 9.4% in those 25 years. unsurprising. Japan is still number 3, but it's been diluted from 12.6% to 4.4%. So you can see suddenly we're already at that 4. So it took us to number 6 to be at 4% of global equities in the year 2000. Now we're at number 3 and we're at 4%. So the world has been concentrated into the United States and Japan, more so.
China.
Then number 4, China. Then number 4, you're at Hong Kong, which has gone from 1.7 to 3.8. So that's nearly doubled. And then number 5 wasn't even in the list. It had less than 0.1% in the year 2000. Is India, and now has 3% of global capitalization. So they've gone from literally nothing to number 5. And then comes the humble United Kingdom. And this is the one that I think is interesting. So we're now at number 6 at 2.5%. But we have had the sharpest drop.
Yeah.
From 8.1% to 2.5%. Actually, we've had the sharpest dilution of all of that. And that Canada's had a big dilution, 6 to 2.2. And the other new entry at number 8, which wasn't anywhere near the list, is Saudi Arabia, who are now the 8th biggest at 2.1%. And I think what's fascinating about that, obviously just how much things can change in 25 years. Just never count your chickens, always innovate, always look to move forward. But also quite disappointing just how diluted the United Kingdom has become. Because actually, if you look at our world GDP, we've actually only gone from 5.9% to 3.4%. But the percentage of people that want to put their capital and put their property in our stock market has become pretty poor, to say the least, hasn't it?
Yeah, it's really interesting, isn't it?
So,
what is it really interesting? I don't know. You found this incredibly interesting.
I don't know. I find all sorts of stuff like that fascinating. I just think, what does it tell you? It tells you that exactly what I guess our government are wrestling with, which is people don't want to list their companies in the UK, do they?
Yeah, we saw that with like Shein recently, didn't we? There was talk of them coming here,
Pulled
but
back
they're
out
not coming
in the end.
now.
Yeah. People just don't want to do it. And we've got these old dinosaurs and legacy businesses on our stock market, and we've got nothing new coming through. It's
generally the argument is we've gone too far with regulation, isn't there? So like regulation and tax, because people like the UK historically, Britain and European systems they like because it's legal and it's robust and it protects them. But
maybe it's gone a bit too far.
Has it gone too far? Has it become too difficult, too expensive? And we don't quite hold the kudos that we used to. If you said something, you were from Britain or you lived in Britain decades ago, people were the envy of people of the world, and now we're not.
Yeah. Now it's the Chinese.
Yeah, we don't quite carry that kudos anymore.
If I did want to get a free holiday to India, though, there are ways I could do that, isn't there?
Through your business, yeah,
Let's
there are.
move on to this week's deep dive. So, Claire, this just sounds a bit clickbaity to me. Apparently, I can have a holiday for free, courtesy of my business.
Oh, yes and no. Yes and no, Simon. That's the purpose of this. I
hear a lot of people talking about this. We get this all the time. What can I put for my business? What can't I put for my business? What's the legit way of doing it? And all those type of things. So I think you're just going to break it all down for us today, aren't you?
Yes. So I was at CEO Mastermind last week, and this was a topic on there about how to put more costs through your business so you can essentially get more benefits from your business than if you were typically an employee, and a lot of people are not taking advantage of those. So that was what the aim of this was. And I have never seen, I think it was the only time in that room when not a single person was on their phone using their laptop distracted. Everybody was like pin sharp paying attention. I've never seen business owners be more interested in this topic, which is why I wanted to talk about it today.
This is like one of your bugbears though, isn't it? As well as a progressive accountant, like one of your biggest bugbears is that everybody just wants to focus on how they can cheat the system or make a few quid saving on tax or whatever else. And like there's a big saying like in life and in business, which is like you can't save your way to wealth.
Exactly. So
you've got to increase your income.
Yes, by listening to this, you might be able to get a few £1,000s of extra things out of your business. Is it going to move the dial? Probably not. And that's where you need to focus on long-term growth, because ultimately that's where your wealth and your true lifestyle changes are going to come from. However, particularly if, our last podcast that we just recorded was about how we might be heading into a bit of an economic downturn, and therefore things like this carry more weight.
Yeah.
If you can make your current business cash and your current business processes pay you a little bit more into your pocket.
Yeah. I mean, everybody I think it's funny, isn't it? Because people just feel like a little bit better and a warm, fuzzy feeling inside, even if it's just a little bit. It's the same reason that people use coupons and still, get excited when they get 10% off or something. It's people like to feel like they've won a bit.
Exactly. And I don't think Rachel Reeves has got any fans. So sticking one to Rachel Reeves, I think, will please business owners as well.
Absolutely. Great. I've got a blank piece of paper to me, so I have no idea what I'm saying.
I thought you were going to ask me a question then.
No, not at all.
Okay. So the topic that we want to cover here is can your business pay for travel? So, for example, if you want to go on a holiday, if you want to go to another country, what can your business pay for you? And also we'll cover off what your business can pay for your employees.
Yeah.
Now, we're not going to give you specific things. We're going to give you a high level of what you need to understand. I will start by saying that what we're going to cover here, most of what we're talking about sits in that grey area of accountancy. So in the UK, we have what we call a principles-based accounting policy. And that basically means that we have a principle about something rather than black and white rules of you can do this, you can't do that. Yeah. Sometimes the rules are black and white, but the vast majority of tax stuff falls into that principles-based area. Mm-hmm. If you ask your accountant a question and you are consistently being told that's not allowed, no, you can't do that, no, I would argue if you have an accountant that truly understands principles. Because if we at Profit Cash Growth, if we get a business owner come to us, sometimes it's black and white. Sometimes it's just, no, that's against the rules. If you do that, you're going to land in trouble. And if a business owner does that and we're aware of it, we are supposed to report them. So I'll put that in there. So ask your question in a delicate way that doesn't compromise anybody. Yeah. However, what a lot of the questions that we're getting are not black and white. And therefore, what we're going to do is we're going to reply and say, look, these are the rules. It's not for me I don't work for HMRC. I'm not there to be a tax inspector. I'm not there to ask you give me evidence that didn't happen. I'm not there to do that. I'm here to say, if X, Y, and Z happens, it is allowed, or if A, B, and C happens, it's not allowed. Yeah. You decide how you play within the rules. And if you tell me that something is a certain thing, I don't have to ask for evidence for it. Mm-hmm. But I cannot act dumb and turn my back when I know that you are deliberately flouting the rules. Let's put it that way. Yeah. So when you're having a conversation with your accountant, if they're constantly just saying, no, you probably don't have an accountant that is particularly savvy when it comes to things like this. And my suggestion is that you consider talking to a different accountant.
Or just extremely risk averse and, and just they don't take a pragmatic view to things, because it is safer from every perspective. If you're in those professions, just say computer says no. It is safer and easier for them to do that, isn't it?
Actually, my job is to say these are the rules and the risk is yours. If you're comfortable that you're playing by these rules, then absolutely you can put it through your business, because when you sign off the tax return, it's your liability, not mine, as long as I've advised you correctly. Yeah. So I can't help people to deliberately break rules or turn my back when people are deliberately breaking rules. But if something is in a grey area, I can advise you on the rules and you tell me whether it's yes or no. Yeah.
Cool.
Yeah?
Okay.
So let's have a scenario. Okay, so this is one of the things that came up, and there was a family-run business there. I think it's probably like 4 or 5 family members work in the business and probably like 20, 30 employees. So it's quite a sizable business. And they were asking, can we have team meetings? That was the first thing that came up. And I said, well, yes, team meetings are a part of doing business. We all know that to motivate your team, get them to communicate well, things like that, having a team meeting is important.
Get them together,
okay. So if you're having a team meeting that is a business update, you're sharing statistics, you're talking about how the business is moving forward, absolutely.
But can we have a team meeting in the Maldives?
What's the business reason that you're going to the Maldives?
Well, we've got a client there, Maldives, who we're seeing at the same time. So we've got the whole team there, we're going to have the meeting as well.
Yeah. Does everybody need to go to the Maldives?
Well, we think that for the retention of that client, it's good that they see every one of the senior leadership team.
Okay. And how long are you going to the Maldives for?
3 days.
Oh, okay. I'd probably say,
because it's not really reasonable for us to travel for 14 hours to have to jump on a plane straight after the meeting.
It's tiring, isn't it?
It's tiring. We need to recuperate. We probably need to get our head down for at least a day, and then if we can, do our strategy day as well on the following day while we're all together, it saves us having to get them together when we're here.
Okay, but now on night 3, you've decided to hold a team building event, and you're going to the beach to build sandcastles together and have a big party. Now
Staff
the lines
entertainment's
are
not included though.
So you can see by just us having that
Quickly.
conversation that it's not just a case of can I go to the Maldives on my business. It's like, well, actually, yes, you can go to the Maldives on your business under certain circumstances. So what I'm going to talk you through is the legislation and some terminology that you need to think about. So firstly, the biggest one that you need to cover off is there is a phrase in tax law that is essentially, is the expense wholly and exclusively for the purpose of your trade?
Mm-hmm.
So is it absolutely necessary that you do this? And actually, staff entertaining is deemed as necessary in terms of the course of trade. So often you can put staff entertaining through your business. Things like team building, nights out for your team, things like that, taking them out for dinner to say well done, all of that type of stuff is what we would call staff entertaining.
Mm-hmm.
Okay, so you're allowed to put it through your business. Your business is allowed to pay for it, and it's actually deductible for corporation tax, and you can claim the VAT on any costs. However, staff entertaining is actually a benefit in kind, and therefore it should be going on either a P11D or there's something else called a PAYE settlement agreement, which is basically a P11D where the employer covers the entire bill and it doesn't impact employees.
Okay.
So what we can see there is I've just covered 3 taxes. So I've just covered corporation tax, VAT, and payroll taxes, benefits in kind.
Yeah.
So we can say, yes, it's allowable for corporation tax. Yes, you can claim VAT, but you've now got to pay an extra tax over here.
Okay. Yeah.
So it's never that.
It's never that straightforward.
It's never that straightforward. Yes. So can I claim the VAT on this? Well, yes, you can claim the VAT on that, but you've now got a tax bill to pay over here, so it's probably not worth putting through your business.
This is why our tax legislation is 26,000 pages long.
Exactly. So you need to cover off, is it wholly and exclusively for the purpose of the trade? And if the answer is yes, then chances are you can put it through your business and claim the VAT on it.
Yeah.
Okay. But there's then also an additional phrase called duality of purpose. And this is where that Maldives trip, for example, becomes a little bit blurred, because what is the duality of purpose? Because, okay, we're taking the whole team to Maldives. Fine. Let's say that's a staff entertaining event. Okay, it's going to be probably allowable for corporation tax, probably claim any VAT related to it, but we've now created a taxable benefit for our employees. Fine. We're happy with that. But now only directors are going to Maldives. And all of a sudden, if you were an external person looking at that, you'd say, 2 directors that happen to be a married couple are the only people that are going to the Maldives. This is really exclusively necessary for purpose of business. They're now spending 7 days there. They've only got 1 meeting. All of a sudden, we've got duality of purpose. It looks like they're having a holiday.
Okay.
So all of a sudden, those lines are a little bit blurred. And when you've got duality of purpose, that is normally when your benefit in kind kicks in.
What happens if I've got to fly there and back, so the flights are business, but they're a week apart, but I only claim the hotel for the one night because I'm there, but I pay for the other hotel nights myself?
Yeah, absolutely. So if you've got a client in the Maldives, you have to fly there and back to meet them.
Yeah.
So that's
the fact that that's a week apart
is irrelevant, because you would all, even if you flew there for 1 day, the flights would be the same cost.
Yeah, first class, yeah.
Well, but what's not essential for that one meeting is to stay 7 days in a hotel.
So you could claim the right and reasonable amount of time that you would have a hotel. So you probably claim certainly 1 night. You might be able to stretch it to 2,
maybe 3, with the distance of the travel and allowing reasonable
claim
rest.
The rest. You could probably claim the meals for the day or 2.
Because you're away from home.
And all the rest of that and everything else that you've got going on.
Yeah. Do you need to get a massage there as well? And
did you need the prostitute?
No. So, but you can see how actually that trip alone is not clear cut whether yes it is or no it isn't.
But you can hack it up and apply the right things to the business and then pay for the other things yourself.
Yes.
So that's what you need to do, is become a hacker.
Yes. What you've got to be very careful of is HMRC will apply. They'll look and they'll say, is what you're doing excessive? And this particularly directors have to be very careful, because HMRC are not immune to the fact that there are various tax efficient reasons why people run a limited company. And therefore, the rules around directors are a bit tighter than employees. There's not really anything specific in legislation that says directors can do this and employees can't, or vice versa. But they will be a bit more stringent when looking at directors, particularly if it is a director-owned business, a family business in most instances.
Yeah.
So that's where you've got to be a bit careful and be comfortable that, do you know what? If I worked at a business and my role was managing director at a business, would I be going and doing this trip? Is it reasonable that in the normal marketplace, a business would cover these expenses and pay for this type of trip?
And also, let's not forget that, if it wasn't for the business reason, you'd never even be there in the first place. And you're there overnight and all the rest of the stuff you have to give up that encroaches into your personal life, that really justifies the whole situation as well.
So we had this the other week, didn't we? I recorded a podcast in Preston on a Monday morning.
It's not
quite the level that we're talking about. I know it's really
this
frustrating.
This is not an example that's a good one.
So we recorded a podcast in Preston on Monday morning. So we drove up on Sunday and it's like a 4-hour drive or something, so we stopped en route and had a reasonable lunch because we were away from home, and then we stayed in a hotel. I was first class because
I was in the back of the car.
You were sitting in the back reading your paper while I drove, and you put your earpods in so I can't interrupt you as well. You don't even put anything on them, do you? You just put the noise cancel effect on. And then we stayed in a hotel that evening and we had a nice dinner out, but it was all in the course of business because the only reason we were going to Preston was to record that podcast. There was no duality of purpose there, so all of our expenses were allowed. However, if I had recorded a podcast in London and we'd decided to go and stay at the Shangri-La and we'd gone to Beast for dinner, and all of a sudden our hotel is £1,000 a night and our dinner at Beast with a couple of expensive bottles of wine is £2,000.
Well, hang on a minute.
Is that excessive?
Well, do they have a right to decide what level of lifestyle that I lead? So if on my normal lifestyle, I live that lifestyle, and when I go for business, I expect the minimum lifestyle is to be, the Shangri-La, and I can demonstrate that.
You've used the wrong approach there because you have looked at this saying my lifestyle. It's not your lifestyle, it's your job. What's normal in your job? Is it normal for the managing director of this sort of size business to do those things and spend £3,000 on one night in London?
If you were the managing director, yes.
If you were the managing director of a big,
is it right that the managing director flies business class? Yes. Is it? Yes.
And I think this is where an accountant saying yes or no is doing you a disservice, because is it right that we can go to Beast and spend £500 or £2,000 on dinner for two people? Is that right? There is nothing to say yes or no to that. And that's where you've got to be comfortable that should HMRC come in and do an inspection, you can comfortably argue that was not excessive. That's reasonable for somebody in your position in a business of this size, that's the type of food that they're accustomed to, and that's the type of perks, if you like, that would be offered to somebody in that business. So is this common in the open market? Are other businesses doing the same thing? Yes or no? And if you're the only one that's putting through £3,000 dinners, I'd argue it's excessive.
Given the fact that if you go into Beast, it's just full of business people, you'd probably have a good argument to say that's a business restaurant. That's a very good business restaurant. It's clearly a business place that people go, normal consumers aren't spending that kind of money, So.
Well, but then you go into Beast and actually it's full of business people probably doing client entertaining, which they say is not wholly and exclusively for the purpose of trade, and it's not allowable. You can't claim any VAT and it's not allowable either. So that's where you have got to really be comfortable that you can sit there with a straight face and argue to HMRC that what you're doing is fair and reasonable.
I bloody well could, I know that.
Well,
good.
I don't know. So the other thing you've got to be careful of as well is, this whole thing around duality of purpose, I think, is really something that a lot of business owners just take for granted. And we will often see them say things like, can I put this through the business? Can I claim this? And we'll see receipts come through for dog food and clothes and coffees is another common one. And it's actually all of these things have got duality of purpose. Having a coffee is function of being alive. Everybody needs to eat and drink. You're going to need to eat and drink regardless of whether you're going to work or not. Therefore, your job, that's not a requirement of your job, and that is not something that can go through the business.
But if I was at home, I could make a coffee for 5 pence. But when I'm out, I can't do that. That privilege is taken away from me. I have to go and buy a coffee. So
travel expenses and a subsistence. So that would be things like paying for travel expenses, like train tickets, anything like that, taxis, also getting coffees, lunches, everything like that. Generally, there's got to be a business reason why you're traveling, and commuting is not a business reason.
No, that's getting to work.
That's earning an income, which is a personal reason that you're doing that.
I understand that.
So if you're just nipping into a coffee shop and getting a coffee on the way to work every day, that's not. If you happen to travel to London a couple of times a week and meet clients, that's also not. But if, when we're going to Preston and it's a 4-hour journey and we stop on the motorway and get a coffee because right that we have a break.
But it's not our normal business routine.
Exactly.
It's very exceptional. So therefore, I see that. I've always seen that difference.
It's exceptional.
That would be the argument.
And I think that's the thing. It's like if it's normal, if you're a salesperson and you're constantly on the road, it's normal for you to do that, and therefore don't expect to claim coffees and lunches and things like that.
Yeah. Nice.
So I think that we've covered a few scenarios there, and probably our listeners are none the wiser as to whether they can or can't put costs through the business.
Never the point in the podcast. It's never the point in any of it. The point is that you can be pragmatic about this, and no doesn't always mean no, and yes doesn't always mean yes.
Exactly. If you've got an accountant that is saying, no, you can't do that, there are going to be a couple of circumstances that applies to, but broadly speaking, you want an accountant that's saying how you could make it an allowable expense, or at least a portion of it to be allowable.
Hack it up. That's what we've learned today. Hack it up.
Exactly. And business owners
analyze
just be
everything.
so careful about creating benefits in kind. So essentially, a benefit in kind is when they're essentially saying, we might as well have just given you salary. We're going to tax it like salary.
I mean, this is not even talking about holidays, but you just get me, don't you, to print off my entire Amazon book purchases for the entire year, once a year, to put them all through the business, because I literally order a book a week, don't I? It's ridiculous. And I never think about claiming it, but they're always business, but they're all linked to the business education. They're never anything that's not.
You've got to be, again, even books. It's like so unclear with books, for example, because there's duality of purpose again, because actually the argument would be, well, you're reading that book so that you can earn more money, but you could earn more money on the employment market.
Okay. And
therefore you're learning this as a personal benefit, i.e. you're increasing your personal skills, which allow you to earn more for your life.
But
if you're not a business reason.
But if you're not an employee, you're not your own. If you're a business owner, you can only use it in the businesses you own. You're not going to use it.
No, because you can go and get a job somewhere else. It so happens.
Business owners are wholly unemployable.
Yeah, but there is still duality.
They must know that by now.
Purpose is a personal benefit to you. However, if we'd had a one-to-one and, I've given you some feedback to say, Simon, your communication isn't quite right, have a read of this book. Right. Have a read of this book. It would really help you. I would argue that you could sit in front of HMRC and say that's a legitimate business expense.
With a straight face.
Yeah.
Fair enough. And then we come to how often and how likely HMRC are to ever get off their arse and come and see anybody or do anything.
Well, there is that, but just be careful about excessive.
Yeah.
Excessive is the main thing.
Excellent. Good. Thanks for that, Claire. Let's move on.
No problemo.
To this week's Profit Cash Growth Extra. So this week, I've only brought this one to the table because I was having a chat with my business partner. Basically, we were sat in a meeting and his alarm went off on his phone. And he does this all the time. He sets alarms for everything. Now, I do this a lot. I set alarms like for really urgent stuff to remind me to go to this or do this, or this meeting's about to happen or whatever else, because I'm not great with the diary and it doesn't pop up and alert you or whatever else. And he always looks at me, he's like, I just don't know what I set it for. So his alarm will go off and he's like, what did I set that for? And he'll ask himself, what did I set that for? Oh, I know this. And I went, don't you label your alarms? And he went, what? You can label your alarms? I was like, yeah, look. And I was like mine just went, literally, one of them said, wake the fuck up. And another one just said, get the washing out. And another one said, do this, whatever else. So yeah, if you're one of those people that are out there setting alarms on your phone, on your iPhone and that, and you've got loads of different alarms and you set alarm things to remind you to do things, and you find that when the alarm goes off, you think, I can't immediately remember what I set that for, you can label the alarm. You just literally click into it. I can't remember now how you do it, but you click into it and somewhere there's an option to put a label on that alarm so that when it pops up on your phone, it tells you what the alarm's for.
God, I found that incredibly dull. Because the only time I ever set an alarm on my phone is to get up in the morning. I just don't forget.
And you don't even need to do that because the automatic blind we have just wakes us up anyway.
Yeah.
Anyway, thanks for joining us for another week's podcast. As always, if you feel like you might have outgrown your current accountant and you'd like to work with Claire and the team at Profit Cash Growth, you can go over to the website, profitcashgrowth.com. You can book a discovery call on there. You can listen back to all of the different podcasts and educate yourself to the hilt. You can also order a free copy of Claire's book, Profit by Numbers, on there as well. And as always, do share this episode with a business owning friend if you don't mind. You can rate, review and hit the follow button, and we will see you again next week.